We are live here with a special edition of the Black Motivation Broadcast. We're on here with subject matter expert Jason Swanston of OVNIO. And tonight we're talking about raising capital for our business. So I want to thank you first for coming onto the show so much for sharing your knowledge and your expertise with us, Jason.
Thank you for having me. I truly appreciate it. Ashley. It's always a pleasure to be on your platform. So thank you for having me.
Thank you. Thank you so much. So, actually, versus normal fashion, where we just hop straight into the interview, I want to give a little bit of background about our illustrious guest, Jason Swanson. So, featured on Fox Business due to the tremendous success and innovation that is Jason's social TV network, OVNIO. Jason Swanson is a business mogul who's got the golden touch. All right, people? He also has over 17 years of animation, video game coding, and computer science experience. So I want to thank everyone who's on live now for streaming with us, as well as thank everyone who's going to be watching the replay for streaming with us as well. Thank you so much for joining us. So let's get into our first question. Synonymous with business and success, Jason, you have been successful from a very young age. Born to a mother who worked in data processing for over 30 years, and to a father who is an entrepreneur throughout the U.S. What do you think are the key ingredients to being a successful entrepreneur, even before we get into what it takes to raise capital?
Thank you. I think that the key ingredients in becoming a successful entrepreneur, one is knowing what you want.
Okay.
In the industry that you choose, whatever industry that you want to delve into, whether it's a vertical market like technology or medicine or the entertainment business, you got to know exactly what you want. So that's one. Two is
Okay.
you have to be very laser focused in what you want out of the industry that you're entering in. So you have to be disciplined. You cannot let any I like to give the analogy like the horse on a horse track that has blinders. You have to have blinders on and to see the end goal. You have to see yourself at the finish line. So you have to have discipline without getting distracted, because if you get distracted, well, 9 times out of 10 you will be distracted, because that's just the way life is. You get distracted with things that are just like that are unrelated to your focus or your goal. So you have to have discipline. So that's two of the key ingredients in my professional opinion. And the last ingredient is faith. You just have to have a little bit of faith in yourself. You have to well, I like to put this at the top. You have to have love for yourself that you know that you're going to achieve, and you have to see yourself at the finish line. But if you love yourself, then you'll be able to achieve anything that you put your mind to, especially if you're going into this particular realm of entrepreneurship. It takes a specific type of mindset to be an entrepreneur. It takes a lot of discipline, a lot of focus, definitely a lot of faith in yourself. A lot of people are not going to believe in you in the beginning. A lot of people are going to exude their issues on you because they're scared of their own. My dad likes to say they're incarcerated in their own bodies, so they like to project their negative opinions on what you're about to do. They like to give you examples of whoever else is in the business that's already doing it, and you can't do it for some reason.
Right.
We all go through that when we're starting a business with immediate friends, friends, as well as just associates from our immediate home area, as well as the industry that we're in. So you have to have some type of discipline. You have to have laser focus, blinders on, and you have to have faith. And I think those are the main ingredients in terms of getting into any mindset of becoming an entrepreneur or delving into it.
Awesome points. Having faith in yourself, definitely key. And also those blinders, like you mentioned, laser focus. Not getting distracted by friends, family members, other deterrents. All these things are really key to when you're building your business. So what do you think are the 3 keys to presenting a new business to an investor?
Great. That's a great question. In my experience, because I've had a lot of failures in business, and I'm proud of my failures because, it's like getting lost, you'll never do it again. So I'm proud to fail. And throughout my failures, I was able to understand the various different nuances in entrepreneurship and dealing with different types of individuals. So the ingredients I feel in terms of approaching a new investor in the beginning, I like to call them components. Components are as follows. You have to have an investor pitch deck.
Yes.
Investor pitch deck is very, very key, especially in this day and age. People are they're very short-sighted, and I'm not being
Mhm.
derogatory. It's just simple mathematics. People are
Mhm.
literally 1 + 1 = 2. Uh, do you have a component that reflects what you want from me as an investor? And that component
Mhm.
in this case would be a pitch deck. A pitch deck is a 10 to 15 page slideshow of what you're basically presenting to an investor, which would at the end, would reflect what you're asking in terms of the dollar amount, whether it's $100,000, $250,000, or even $10,000. Point
Mhm.
that a pitch deck literally explains in short what you're looking for from the investor, whether it's your family member, right,
Mhm. Right.
right, starting from your mom and your dad,
Right.
all the way up to a an angel investor,
Mhm.
or a hedge fund group, or venture capitalist, depending on what area of the field that you're getting into, what industry you're getting into. So a pitch deck is important in terms of key ingredients. The other ingredients is knowing your sales pitch, basically, your elevator pitch. I like to tell
Right.
young entrepreneurs to have an elevator pitch. If you can't, an elevator pitch specifically is when you get into an elevator, right? Before
Mhm.
that elevator opens up, if that investor, if I'm next to you and I have, let's say, $5 million liquid that I can invest into your company, before that door opens up, those elevator doors open up, I have to basically be convinced about your business, that you are the right person and you have the right team behind your business, that my money is safe if I invest in you. So an elevator pitch is exactly that. You're pitching to me with less than 11 to 15 seconds, depending on how long the elevator ride is. And you
Right.
got to convince me whether or not you have the goods, and you have the team and the focus and the faith, because people invest in people. They invest in ideas, but more importantly, people invest in people. I have to believe that you have the faith in yourself in order for me to even invest in your company. So in terms of key ingredients, I think that that's a major ingredient. The last ingredient, I feel, from my professional experience in terms of success, outside of a pitch deck and a sales pitch, is team. Okay, you have to have this keen understanding that not everyone is going to do what you do.
Right.
You have to differentiate yourself from being a friend as opposed to the boss. So knowing what type of team you need in order to progress with your entity or your corporation or your small company, eventually growing into a major Fortune 500 company or blue chip company, if that's your focus, you have to have team. You have to understand that the team that you choose should know more than you in those specific spaces to help your company thrive. And I'll be very specific and I'll be very short. For instance, you have to have a good person, a good accountant, let's just say. Okay,
Mhm.
you have to have someone that knows accounting very well. If you're not proficient in counting numbers or accounting, then go out and seek that person, that you feel and you trust, that after you've done your research on that particular person, that can hold that particular position for you, within your entity, within your corporation. So it's all about team, knowing the type of team that you need, and identifying those people professionals, I apologize, in their field. Okay, right down to your logo artist,
Mhm.
your logo, right up to your counsel, your legal team that represents you in case you get into a lawsuit, God forbid. You always want to have a nice corporate attorney that understands corporate law. If you're in the entertainment industry, you want to have a great entertainment attorney that has
Mhm.
some type of they have some type of bones in the business. Yeah, if
Right.
you're dealing in the financial area, if you're dealing in the tech area, you want to have a great IP attorney that understands intellectual property.
Right.
If you want to get into the tech business and you want to create your own cryptocurrency or your own blockchain, if you want to, if you want to have your own website, you should also seek out an intellectual property attorney or IP law firm that
Mhm.
represent you. And yes, can these things or can these people get expensive? Of course. And that is why we're having this show today, because we're going to discuss various different ways that you can creatively reach out to these individuals, these investors, to help you jumpstart your business.
Hey, so exciting. So speaking of investors, what is the difference between an accredited and a non-accredited investor for people who don't know?
Great. It's a great question. So it's very simple. An accredited investor is someone who's worth over $1 million, point blank period. So if they're worth $1 million to $100 million, that's an accredited investor that the Securities Exchange Commission recognizes. The SEC is like the police department of the stock exchange. So an accredited investor is basically someone that is worth that amount of money on the books. A non-accredited investor, very simple, is someone that is not worth $1 million. Someone who has $10,000, $100,000 in their bank account, or $100,000 worth of assets that they can prove that they have that particular amount of money or amount of assets in their coffers. So that's the difference between a non-accredited and accredited investor. When you're starting your company, you want to go after non-accredited investors. Why? Because it's easier, basically, because accredited investors who are worth millions and millions of dollars, or who have millions of dollars in assets, are going to ask for more information on your company. Not saying that non-accredited investors won't, because there are seasoned investors. Okay, that's a different whole category or demographic of an investor. But the point is that non-accredited investors can be investors that are also knowledgeable, equivalent to an accredited investor. However, a non-accredited investor is more lenient to talk to you, because non-accredited investor can give you a small tranche of money, north of 700, $1,000, $1,500, $2,000, and those little tranches of money that you go after to reach your goal are things that you would need, in order to jumpstart your business, because those investors, those non-accredited investors, can literally help you jumpstart your company and pay for things that you need immediately, which will be under operational funds. Operational funds is something that you definitely have to consider, and that's just for you to operate. And that's predominantly it in a nutshell.
Awesome. So I want to say hello to all of our guests who are joining us. Hello, Fern, in the comments. Fern Burke, hey. Hope you're doing well. Hey, Natasha Thomas, thank you so much for joining us as well. So we're going to get to the $1 million question here. How do you find investors? $1 million question of the hour.
Well, that's actually a great question. The great thing about today's marketplace is that there's money all over. There's money circulating all around us. Even though we're in a COVID pandemic, there's money all around us. Everyone has money on some level, whether it's $500 down to $10, all the way up to $1 trillion. There's money everywhere. Money will always be around. You just have to know how to, as we would say uptown, because I'm from Harlem, you just have to know how to sniff it out, right? So the thing is that how you find an investor in this day and age is fairly simple. And I like to just use me as an example, because I thought that going the generic route of raising capital for my company was like anyone else would do in the technology space. Go through the VC route, venture capitalist route, or hedge fund route, or even angel investor route. People say, oh, you can, you sit up there and you give your spiel about OVNIO, and you have like 15 people in the room, and then someone gives you a check. But you have to get there, right? And that costs. So my advice, if anyone is looking at our interview today, or excuse me, our discussion today, is if you have an idea and that your immediate friends are working a job and that truly believe in you, if you have family members that truly believe in you, wholeheartedly, without equivocation, those are your investors in the beginning. Family and friends are the best demographic to go after first and foremost, not the ones that were a little jealous when you guys were growing up because you had more toys, or whatever the case may be. You want the people, right? You want the friends and the family members that you wouldn't expect them to give you $500 or $100, but you want those people. You want to go after those people in your immediate circle. Why? Because they're going to be your I like to call them your focus group, right? They're
Mm.
testing ground to see whether or not you have the gumption to go out on your own, because it's very scary, to step out on your own as an entrepreneur, because you don't know if you're going to be successful. And as per certain research, it states that if most companies in America fail within the first year because they just don't have the proper infrastructure. However, it takes a lot of gumption, and it takes knowing how to pivot. Now,
Right.
in reference to finding investors in this day and age, I like to use social media as a great platform. Why? Because um, if you have 5,000 friends, quote unquote, here on Facebook, and they're following you, they're liking whatever you're into, especially if it has to do with your idea of a business venture, clothing line, um, record label, media entity, TV show, whatever. If they're liking it, 9 times out of 10, they're investing their time, especially if they're an investor quietly, if they have like a stash account, or if they have like a Webull or a Robinhood, and they're investing in, like, they're buying stock in like Amazon quietly and stuff like that. 9 times out of 10, they understand the value of buying into a company that's successful.
Mhm.
They believe in you psychologically. 9 times out of 10, they're going to take a look at what you have to offer. In this case, it would be your pitch deck, correct? So
Right.
the people that are following you on Facebook, that are really cheering for you, those are your first investors that I would recommend you go after. And you quietly, approach them on Facebook through Messenger, and you approach them and say, "Hey, this is what I'm about to do. This is what I'm getting ready to do. This is what I'm doing, and I would like for you to be a part of my journey. In fact, I would like for you to make money off of in this case, I use me as an example, off of my technology. You know me, you know my background, or you know what, I'm just starting, but you know my heart, you know my passion. Again, people invest in people. Okay.
Right.
And so I think that the best route to go into is the vein of marketing to people that follow you on social media first and foremost. And especially if they don't know how to invest in your company, that is a great candidate to teach them how to invest. Because let me tell you something. I've had people who never even thought of investing in a startup tech company, let alone start. Period. It's like when Obama was being inaugurated. Before that, a lot of African Americans never voted, right? But
Right.
they were being taught, like, hey, listen, this might be a good thing back in 2008. So I like to give that as an analogy. But from a parallel perspective, it's like people who've never done something before. You have the ability now to teach them, you
Mm.
know, how to invest in your company, especially if it's a startup, and if it's a privately held company that eventually will make you money and them money.
Mm. Totally awesome advice. I hope everybody who's on right now is soaking this in, getting all this awesome information. If you're just joining us for the first time, my name is Ashley Jones of Black Truth Media, and this is a Black Motivation broadcast. I'm here speaking with subject matter expert Jason Swanston, CEO of OVNIO, business mogul, extravaganza extraordinaire, and we are talking about raising capital for businesses. So let's hop into the next question. How much money should a new business invest or acquire on their own before they start looking at investors?
That's a great question. And here's the best answer: acquire as much as you can. And to be more specific, uh, have a plan on what you want to acquire. Okay. So if you know that you need $500, go after 5,000. If you know that you need $10,000, especially depending on the industry that you're in,
Mm.
you're always going to need money when you're starting a company, period, the end. You're always going to need operating capital, which is money that you need to operate your business with. That's what operating capital is, right? So go after as much money as you can. Be very, very frugal with your spending. That's why having a accountant, is something I do recommend. um, Saving all of your receipts is also something I recommend. They give a lot of they meaning the state that you incorporate in gives you a lot of lenience when you're a first incorporated business for the first year. There's a lot of things that you wouldn't know unless you had a certified public accountant on your team. So go after as much money as you can, is my point. If you go after as much money as you can, then you'll have that wiggle room, as we call it in my industry. You have that wiggle room to really do things that you need to do, and you'll have the operating capital to put money or allocate money into various different divisions or departments. For instance, marketing your business, one. Legal, two, because you always need, you want to have great legal advice for your law firm to draft up contracts for you, MOUs if you're going to partner with a company. You want that wiggle room. So go after as much money as you can, but have a goal. Like, again, it depends on the industry that you're in. If you're a rapper, and you want to start your own label, it's going to cost you some money. $50,000. If I was a rapper and I want to start my own record label in this day and age, 50 grand because of social media. If you are in the media space and you have a TV show that you're streaming on one of these platforms, like Facebook and Instagram, and you wanted to actually bring it to market and create your own brick and mortar, I would go after $250,000, all the way up to $10 million. Why? Because you're in the television space, which is totally different. Yes. Do you stream online? Of course, but the business model is different. It's not the same as just, creating a independent film and throwing it on, a streaming platform like YouTube or Netflix or Hulu. That's a different animal, right? So that's different from starting a production company to make your first film, right? Feature film, which is totally different from, starting a production company to create your first television series, which is a different animal. And the reason why I know these particular industries so well, because I've physically made money in all of these industries that I've mentioned. So at the end of the day, have a goal, have a number in mind, and then tag on, 10, at least 500%.
Awesome. So kind of coupled with this question, right? We want to talk about, once the investors do start coming in, where does the new business want to focus when they first get their funds to show that they have been responsible with their investors, and how do they communicate that to their investors going forward?
Great. That's a great question. Well, we're in a social media age, so I think it's a two-pronged answer. But from a business standpoint, your accountant basically puts together, your books for you, because investors eventually will want to see, how you are spending the money. Okay. And they eventually want to see a return. So when you are a privately held corporation, or a publicly traded corporation, meaning you've gone public on the New York Stock Exchange, legally, you're supposed to provide your shareholders, quote unquote shareholders, as a privately held company, with information. It's you're required to hold what is called an annual shareholders meeting. Okay. And if you don't hold an annual shareholders meeting, you should have a very strong relationship with your shareholders, that they know what's going on a consistent basis. And the good thing is that when you have shareholders that are either family, friends, or close associates, they understand that that it is a risk, right? They give you their money, and it is a risk. However, they understand who you are, and they know that it's going to take time. So from a legal perspective, you want to be as transparent as possible, and bring your investors with you on the journey in terms of what's going on. Well, these are my pivoting moments. This is what I think I'm going to do as a company with the team. Sometimes investors may give you advice. I like to look for investors that are smart in their respective area to help build my business, because at the end of the day, when a person buys stock in your company, especially if it's a privately held company, not publicly traded, but if it's a privately held company, all of your investors that have invested in you are in this particular boat with you. So if they're whole and you don't see it, your investors might definitely, they're going to see it. And I think that would help your journey as an entrepreneur. And so to bring it on home, I think that you should be as transparent as possible. You tell your investors what's going on. My business culture is totally different. I like to talk to my investors on a monthly basis, so that we don't have to have one annual shareholder meeting, because the annual shareholder meeting is, I mean, it's cool. I get it. But depending on how your business is structured, whether you're LLC, C corporation, or S corporation, and the way your bylaws are structured, you basically can basically, create your own laws and do what you want. And your shareholders obviously are investing in how you've created your company, and how you have built, excuse me, your corporate infrastructure. And they have to respect that. They will respect that. And as long as you keep it, as we say uptown, a buck, right? You keep it up.
Right.
They'll keep on investing. And especially if you hit a snafu, right, a bump in the road, and say, you know what, I miscalculated. We're going to need another round of, let's say, another infusion of $100,000. You can always back up to these investors because you've been transparent.
Right.
And they understand the market. They understand that, you're in a market where there might be some competition. Industries that it shifts. The markets crash. The markets do really well. At the end of the day, as long as your investors know that you know what you're talking about and you're educating them along the way, even if they know what you're talking about, as long as you're educating them that you know what's going on in your respective industry, then they'll always hold their pocketbooks and their wallets open to you, so that you can be successful, so that they can be successful and get a great return.
Right. Because that's what we're all looking to get at the end of the day, is that return.
Right.
I want to thank Javon Jones and Castle Richardson for joining us and commenting, and thank you everyone who's joining us. So let's hop into the next question. So we've been talking a lot about new businesses. Let's talk about established businesses. So how does an established business show their fiscal responsibility to potential investors?
Right. Well, again, so it's if a company is publicly traded, legally they're supposed to hold an annual shareholders meeting. And once a year, if you are a shareholder in a publicly traded company, like let's say Amazon or Google, well, Google is not technically publicly traded. It's their parent company, ABC. So ABC owns Google, right? So if you own stock in ABC, which owns Google and YouTube and Amazon, right, and Netflix, so forth and so on, what they do is, you can see their quarterly earnings. It's public record, number one. Number two, you can actually request it. And number three, they give you what is called proxy statements, which is like 60 to 100 page document that explains the vision of the company, where they are. It's usually a document that projects what they're going to do in the new year. So 2019 will look like 2020 and all of their ideas and their projections, and they'll attach financials to it. So that's how publicly traded companies, major corporations, private companies, basically keep you in line with what they're doing and how they're spending the money.
Awesome. So let's ask another question that may be a myth, may be a fact. Is it true that most investors are more interested in getting in on the ground floor with new businesses, or is it true that they're more inclined to have established businesses be their investments?
I think that it depends on the investor.
Okay.
Investors are different. Each investor is different, and I think that as an entrepreneur coming into your own, you have to be very, very, and I don't want to sound cliche, but you have to be humble to that ideology, right? So going into an investor, you have to understand that if the investor is your friend or family member, they're going to look at you from a through a larcenous screen, but trust you. But now they got to figure out if they can trust your business acumen, right? Because they know you for being an entrepreneur. They might know you for working at, working for somebody, working for the theater, or working, just your little Shopify account. So they trust that, and so getting back to your initial question, I think that it all depends on the investor, and you have to know the type of investor. Now, when you go outside of your immediate circle that you trust, on Facebook, let's say, and it's someone you've never met, you have to, and it takes time to learn to assess the person or the group of people that you're talking to. So research is always key. So if a person says, I heard about you, I think I want to invest, you have every right, because it's your business, to pick up the phone and say, hey, let's have a conference call before I even allow you to invest in my company. Because keep in mind, when you sell your stock privately, right, to raise money for your company to
Mm-hmm.
a person you've never met or don't even know, you're married to them. Okay. So you can do your research on that person, do a background check, find out if they're a felon, find out if they have a criminal record, male,
Mm-hmm.
female, doesn't matter. I don't care if they have a lot of money, doesn't matter. You know, I don't care if they come from another country, doesn't matter. I don't care if they come from across the street. If you don't know them, you can do it with your own friends and family as well. But you already know them. But
Right.
think about the people on the outside of your immediate circle. You have to vet these people as well, because again, if you're going to be an upstanding corporation or thriving company, whether it's small, mid-sized to large here in North America, you have to do your due diligence on the people that want to get into bed with you,
Right.
because you know their problems will eventually become your problems if they want to funnel money through you, and it came from ill-gotten gains, and that's where DC comes in.
Right. Exactly. So, what are some other ways, other than an investor, to raise capital? Because we talk a lot about investors, and they're an important way of raising capital. But as we're drawing to a close of this interview, I want to know, what are some other ways, other than an investor, to raise capital?
Well, the other ways to raise capital is fairly simple. If you have a trade or another skill set, then utilize that to basically raise capital for your business and save, or allocate whatever money you make from your other trade. Like for instance, I'm a graphic designer. A lot of people don't know
Right.
how to do graphic design, right? So I'll do graphic designing for somebody, when I first started my business, and I'll take that money and I'll reallocate the money that I made from doing some graphics for somebody and put it into my new business venture. Okay. So if you have another skill set, definitely expound off that skill set. If you're great with something other than what you're getting ready to venture into from an entrepreneurial perspective, then definitely utilize those particular trade skills, and and expound off of it. Make money. If you're not a cook, I'm not a cook, right? I'll make some pies, whatever. I make some, muffins. But
Hey,
the point,
that's so smart.
and that's for the mindset of the entrepreneur who doesn't want too many people in their business. Who That's for the person who doesn't really want, investors on the ground floor. There's a lot of people like that, and there's nothing wrong with that. However, if you want to if you want to reach a particular goal financially for your company, you're going to have to look for outside funding, and it's out there. And you can get the funding from the people that you would never expect would even pick up the phone. You can actually get it from a demographic you would never expect to get it from, whereby people are saying, "Oh, this particular demographic would never ever invest in you." You know,
Mhm.
I'm a prime example that reaching out to people that one demographic said would never give me money has given me a lot of money. And you just never know. So you definitely have to take that into consideration.
Awesome, 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 awesome. This has been such an amazing episode because we've learned so much. I hope that everyone was able to take away many things, not just one thing from this episode. And for those who are watching the playback, I'm Ashley J of Media. This is Jason Swanston of OVNIO, CEO, creator, founder, extraordinaire. And I want to say I'm so grateful for you coming on to this episode and sharing with us these nuggets, these tools. Thank you so much.
Thank you.
So, a last question for the evening. What words of motivation would you like to leave our audience with on this special episode of the Black Motivation
Hmm. Well, there's a lot. I think that what I want people to take away from this particular discussion between you and I is the fact that there's money out there and everything is possible. Not anything, everything is possible as long as you put your mind to it. You know, um, uh, do away with the misnomer that because of your skin color or your sexual preference or your interests that may be weird to another person might hinder you from achieving your goals in this particular entrepreneurial endeavor. Do away with that mindset, because at the end of the day, you can achieve anything you want to. We live in a day and age where we're in the information space, right? Things, information is at our fingertips by the touch of a screen on our mobile device, right? So there's no excuse for you if you have an idea and you want to get it off the ground, and there's 1,000 other people doing it. Like if you have a pizza shop idea and there's 1,000 pizza shops in your community, that should not deter you to create your own pizza shop.
No.
So what I'm trying to express to everyone who's looking at us talk is that you can physically put your mind to anything, and you will achieve greatness as long as you stay focused, you stay disciplined, you have not a little bit of faith, you have all the faith in yourself. And there are going to be times it's very hard. You're going to have lonely nights by yourself in the shower, in the bed, thinking about, what am I doing wrong? How come no one's investing in me right now? That should not deter you. Just as long as you can see yourself in whatever your goals are. They have these memes going out or these postings, and they say hashtag goals, and they show different pictures of like God, or
Right.
getting married or something like that. Well, have that in your mind mentally. Keep that in the front of your your brain, and see the goals. There's been times where I said, what am I doing wrong? I had this person, a part of my infrastructure, and then did I say something? Like what is going on? So you're gonna have doubts throughout your journey as a new entrepreneur.
Mhm.
Point is that we're in the information age, and so there's so much information that you can read up on from people that have done it before you in the industry that you want to get into, and
Right.
draw from those particular stories. Read from those particular individuals that came before you. You want to be a talk show host, and you happen to be an African American woman. Look at what people like Oprah Winfrey has done with their career, despite all of the other agita or rhetoric that's on social media about opinions about a particular person.
Mhm.
At the business
Right.
moves they have made to achieve what they've achieved, not the backstory, just the business. Now,
Mhm.
it's up to you if you want to go that route. But I learned that you can extrapolate a little bit from everyone's story
Mhm.
and use it for yourself, and use that as and use that as examples to pull from in order to be successful. So that's some of the advice I wanted to give anyone who's looking at me tonight. And the most important thing is, do your research.
Yes.
Research on every single body you do business with. I don't care if they say that they were co-signed, as we say, I don't care if they were co-signed by your mother. I don't care if Jesus came down and co-signed them. You still do your research on
Right.
the person, because like my grandmother always said, excuse me, and my dad, 10 cents can change someone. But
Mhm.
the thought of them making $100 off of your idea by attaching themselves to you changes them quicker than them making 10 cents
Mhm.
help build a business. So you always got to make sure that when you're talking to a person and they want to invest in you, okay, you have to look at it from a larcenous screen and say, okay, I know I have a good product, or I know that I'm a good person, or I know that I have something that they might be interested in.
Mhm.
Your homework in that person. You have every right. Remember, your business is your baby. You have every right to ask questions. Well, why do you like my company so much? Why do you like me so much? Why are you really interested? And you're not being adversarial. You're not being a-hole. You are literally saying, listen, this is my company. I cherish this company, and I really want to protect it. And if that person truly believes in you, he or she will appreciate that you're asking these questions from that particular person. If a person comes and rolls up in an expensive car, heard about your idea, and they might be quote unquote doing it right,
Mhm.
still do background checks on that person. You ask around. You have every right to ask around. Just don't trust searching on Google or Bing to see, some opinions on a person. You do your own, go down that rabbit hole before you get into bed with that person. So focus on researching anyone you get into business with. I recently cut off a situation where a South African company wanted to do business with me. It was really good. It was great. Verbally, we're talking, and the individual who brought them to my table had no understanding of what he was bringing to the table. So it was my job to protect him because this is my brother, you
Right.
know, in the industry. And I said, you know what, I'm gonna protect you. So what I did was I basically gave, the memorandum of understanding to my attorneys, and I looked and I said, oh my God, they're basically trying to, hurt us, and I had explained it to him, and he truly didn't understand. So I broke it down as granular as I could. But
Mhm.
the point was that I was able to do the research,
Right.
my law firm,
Mhm.
to find out whether or not these particular individuals were doing good business, and they were. But however, the thoughts of them making $100 off of me, getting back to the
Mhm.
point that my grandmother, my father made, right? Makes, excuse
Yeah.
me, makes, was always in my mind. I said, wait a minute. So this clause basically states that anything I involve myself in regarding our partnership, you own that. That
Mhm.
was the agreement, you know, and you're not even a software developer. So the point is that you always should be cognizant of the people you get into and do your research. If you don't have the resources to do the research, then you have to rely on Google for the most part. But it's very inexpensive to apply for, an account with one of those websites that do criminal background checks.
Mhm.
Person was incarcerated or got arrested for tax evasion or tax fraud or something major that the
Mhm.
SEC or your potential investors will look at and say, well, why did you partner with those guys?
Mhm.
They then won't invest in you. They won't give you their little $10, $10,000, $10 million. They just won't. They'll back up. Say, no, thank you very much, Ashley, Jason. You're great people. We love you, but we'll come back when you're ready. Which basically means we'll come back when you do away with the people that you've gotten in bed with, who you haven't even researched. And that's basically my advice.
Awesome, 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 awesome advice. So, speaking of advice and speaking of support, where can we find and support you on the web and social media?
Oh, thank you. Well, you can just, you see my logo on the side of my brain. You can just follow our hashtag. I'm on Facebook, Jason_A_Swanston on Instagram. You can again, I'm on Facebook as well. You can follow me there. Click the follow button. We have a group, OVNIO.TV group page on Facebook as well as Instagram. We're about to launch our app in March of 2021. We're going to do a beta test. We're really excited with our cable service this winter by the end of November. And, people will be able to subscribe for free, and see a couple of channels and see how we're basically changing the way you watch television with interactivity. So we're excited about that. So people can follow us, but just, following our hashtag on Instagram or my social media profile on Instagram as well as Facebook. So
Thank you. So if everyone wants to learn more about OVNIO, follow all OVNIO's social media, the hashtags, check out our previous interview where we talked about OVNIO, where we interviewed Jason Swanston. Thank you so much, everybody, for joining us. This has been an awesome, awesome, awesome episode of the Black Motivation Broadcast.